Ladies and gentlemen, is India heading for a bear market? Why are we asking this? 12 trillion rupees have been wiped out in one day. Sensex Nifty tumbled sharply by more than 3%. By mid-March 2026, the broader sell-off had erased almost $533 billion, approximately in total market capitalization, the largest annual drop in 15 years. Of course, some of it was also recovered. India's total market capitalization, also known as MCAP, has declined by over $639 billion so far in March 2026 alone. That's the March 2026 quarter, the sharpest quarterly fall since March 2020. These figures are important because the Indian markets have changed dramatically in the post-pandemic period. What are we really talking about? The first big change is, of course, a significant increase in new investors. There are over 11 crore unique investors now. The other big development is the increase in first-time investors. Many would be seeing a possible bear market for the first time, possible, because they've only seen corrections and a bull run. It may be noted that when the war started on February 28th, the Indian stock market had crashed on 2nd of March. This had wiped out around 6.6 lakh crore rupees to 8 lakh crore rupees in investor wealth in a single session. But then the market recovered almost the next day. But what is a bear market? If you are uninitiated, if you are thinking that you're getting caught in technical jargons, and let me just explain this. We do not intend to make this a technical session, but decoding wartime investments is also understanding how best to position oneself in these uncertain times. So what is bear market? Well, bear market is declaration when it is declared when the price of an investment falls at least 20% from its highest. They often occur in periods of economic slowdown and higher unemployment. Ever since the escalating geopolitical tensions in West Asia triggered widespread selling across the market, more than 400 stocks have fallen in double digits since Iran war. Since the US-Israel-Iran war, which has now engulfed the entire Gulf region and so many other countries as well, reflecting the depth of the risk of sentiment gripping Dalal Street. So is India heading to bear market territory amid the West Asia chaos. Let's just look at past instances. In 1992, the Harshad Mehta scam impact. Don't forget the January 2011 instance in 2008. Often referred to as Black Monday, saw the markets crash 55 to 60%. 2020, the outbreak of COVID-19 resulted in a pandemic, and lockdowns around the world led to a huge market crash in global and Indian markets. Nifty crashed 38% in weeks, followed by a quick recovery. Now, the Asian stock markets have fallen sharply after attacks on natural gas facilities of Iran and retaliatory strikes on Qatar and the UAE. Iran attack has wiped out 17% of Qatar's LNG capacity for up to 5 years. Qatar Energy CEO says its main LNG export facility at Ras Laffan Industrial City repairs will sideline 12.8 million tons per year of LNG for 3 to 5 years. And the UAE has said it suspended operations of the Habshan gas facility and the Bab of field due to failing or falling debris. So what must you do? That's the answer that will help you understand. I'm being joined by Ambassador Jayant Dasgupta, who's a former ambassador to WTO. Also Shashank Ravale, who's a stock market expert. Thank you very much, both of you, for joining me. Well, first, Ambassador Jayant Dasgupta, good evening. Every day we are waking up to new attacks, to counterattacks, to retaliations. The latest that we are hearing at this point is at least 17% of Qatar's LNG pipeline has been destroyed. What does this mean? Break this down for us.
India gets about, I think, 35% of its gas from Qatar, and that has been affected very badly. But India also sources gas from other countries. But the problem is that if Qatar supplies fall very sharply uh, once the war ends, and that is the big question. That the 17% that you have been talking about of Qatar's gas fields, having been put behind by 3 to 5 years, which is the time that it will take to repair the facility, that would significantly push up global prices even after the war ends. So that is one issue. The second point is that this continuing crisis and the widening of the war zone, because now there are reports that uh, facilities in the Gulf countries, apart from Qatar, have also been uh, put under attack or have suffered on account of debris falling from the skies. So that is again going to push up prices of a variety of products other than petrol and diesel. For instance, fertilizers, which will impact food prices, which will impact directly and contribute to inflation. Of course, oil and gas prices themselves will contribute to inflation in a very significant way. Then medicine prices, those which are based on downstream products of petroleum. Plastics, for instance, all kinds of plastic goods will become dearer. So the longer this war continues, the more devastating will be the impact on the economy. The other point I wanted to mention is that banking depends on making profits by lending money. And then, if the enterprises which have been lent money do well, then the bank records a profit. The point is that if there is so much of uncertainty, the appetite for taking loans from banks will themselves decrease. Banks will also build in a risk factor, which is much higher than the normal rate. So credit would become dearer. Of course, it would also lead to
Okay,
contraction of money
right.
flows and inflationary pressures. And the banking stocks form an important part of Sensex, Nifty, and the indices of all other countries.
Sure.
So banks have suffered very badly.
And you've seen the kind of impact even with the bank stocks for that matter. Shashank Ravale, if I can get you in. A very simple thing, Shashank, and this is the question that possibly everybody would be asking, would be having on their minds, because if you look at the track record of India, the Indian markets over the last few years, there have been corrections, but there's been a bull run largely. You've had a whole lot of people as unique investors, many of them first time investors. It's almost at 11 crore unique investors post COVID. For them, this perhaps would be a first such instance. They would be staring at what to do. How are you approaching this?
Yes, ma'am. First of all, I want to tell everyone that yes, since October 2024, it has been a bear market. Means stocks are not able to perform, even though market is trying to give before the war. Market was trying to give the high, but market is means individual stocks are not able to perform well. And now after war is being declared, right? So already the market is being discounted. Yes, because of the war, the market may fall down more, as you rightly said that around 12 to 14 lakh crores of rupees have been lost, but that same market has made money for investors also since COVID, right? So it's a nature of the market that it will go down also and it will go up also, right? So in this war-like situation, yes, of course, as we saw today that it was a biggest fall, it was more than 3%, right? To be very precise, around 3.25% a market went down today, and yes, still the war is going on, as we rightly said that oil and oil and gas are very important, right? And that is getting impacted because of the war. So definitely it's going to impact our market. But I want to tell all the investors, right? If you are holding good stocks, okay, and hopefully if some good results come out of the war, and if this war stops, then definitely the kind of fall we have seen in that opposite direction, we'll see a very good upside in the market. And this things keeps on happening. Means I'm there in the market from last 21 years, so many things keep on happening. Like in 2020, COVID came. In between many other things also came. 2008 crash, everything, right? Because of the Lehman Brothers crisis. But if you see the overall chart from last 15, 20 years, the overall market has gone up itself, right? So if you are holding very good stocks, if you are doing proper analysis, especially for the new investors, I would like to suggest them that take proper knowledge. Don't go on tips or some guidance. Take proper knowledge, go deeply into the market, okay, and after that you can start investing into market. And if once and start with a smaller amount of investment, okay, whenever you are starting, right? Even though market conditions are good, hopefully if the war stops, in even though market conditions are good, but still you have to start with a smaller investment. And over the period of time you will see all the ups and downs, and you will understand how the market reacts in a certain period of time. As if I have invested a lot of money in the market, but I'm not fearful at all, because I have 21 years of experience. But those people who are new in the market, even though they must have invested small amount, but they must be very fearful, right? So you can start with a smaller amount. And those people who are traders, they don't need to worry, right? Even though market goes up, they make money. Even though if market goes down, they can make money with the help of short selling, for the traders who are doing everyday trading. But for the
Okay.
investors, yes, you have to hold some good stocks, hold and buy right and hold tight. That's what I can say.
Shashank, usually what would happen, especially if you are seeing a bear market, if you've entered a bear market phase, you kind of sense till when is this going to run, till how long is the event or the disaster going to last. Whether it was with the Harshad Mehta scam, the impact that happened, you knew it was a phenomena that happened and it would have a course correction eventually. Subsequently, even if you look at 2008, you knew what you were looking at. But the situation right now that we are looking at is no one knows.
Right.
Nobody knows how long this uncertainty is going to be. Nobody knows what kind of impact is this going to be on livelihoods. Nobody knows how is this going to pan out. And how do markets respond to situations such as this? How should investors be really watchful about it?
Yes, I would like to say that those people who are planning to invest newly, I would say them that wait and just what should get over, and after you can think to invest after, once the situations are normal and everything is going good. But those people who are already invested, I would say don't sell your stocks into losses, right? You can hold good stocks. And let me tell you what I think. Whatever I have seen, even I have seen the Indo-Pak war or any other war. I have seen that till the time the wars, even the Ukraine-Russia war, but that was also having some impact on us. Yeah, this is a very big impact. This today's war, Israel, Iran, and US war, that is having very big impact because of oil and gas. But yes, what I feel is once the war stops, or some good news comes, right? The market is an emotional thing that it will react fast, and it will go up very smoothly. And I know it will take some time, but market is all about invest. You have to be very patient, right? So if you are holding good stocks, you know that those are going to perform. So you don't need to sell it now. And yes, till the time this war is going. If the market is going down, at that is the right time that you can buy the stocks at discounted rate, because
Okay.
in normal condition you don't get the stocks at discounted rates, good stocks. So you can buy at a lower rate, and you can hold. Even though if it's going down, you can hold. And for over the period of time, if you have a long term horizon, right, then definitely you will make very good profits. But if you are planning for a short term horizon, so in this kind of situation, please don't enter into market, especially in terms of investment. You can do trading, but not in terms of investments.
I think that's an important piece of advice that our viewers much watched on to. Ambassador Jayant Dasgupta, before I come to you, just one very quick question, Shashank Rawale. So you agree that we possibly are staring at a bear market?
Yes, absolutely right. Absolutely right. I just want to tell one more thing, that when the war is going on, means those people who are bearing those war in those countries, like Iran and Iraq and even US and all, even they don't have the assurity that their lives are in risk,
Right.
right? So if our life is at risk, how can we guarantee it for our money, right? So it's a calculated risk. Yes, when means we are entering into a bear market, and if it's war continues, then definitely the
I think that's a very
situation is going
clear
to be worse.
messaging. Ambassador Jayant Dasgupta, are you invested in the markets? I'm sure you are.
That's a very personal question, but
Okay, don't
I
answer
would
that.
rather
That's fine.
not,
I just shot it out of the
rather
air.
not
I'm sure you're
answer
not
that.
willing to, you were not prepared for that. But here's a question, Ambassador Jayant Dasgupta. What's the kind of uncertainty that we're looking at, the extent of this? Because at the end of the day, a war zone such as this, which is spanning across countries, across infrastructure, the heart of LNG, the heart of energy for that matter, the heart of crude and oil for that matter, is not isolated from any country. No country is isolated from this. So whether, and particularly countries like India, many have said that India has done very well to be able to walk the tightrope, a very tight balancing act that India has managed to do this way. You have even some of the top opposition leaders, including Shashi Tharoor, who has gone ahead to say that India has taken the right stand when it comes to its war diplomacy. But as somebody who has seen so much more, Ambassador, what are we really looking at? What would you say should the sentiment be at this time when people are watching? Because people are tensed, people are worried, livelihoods are at stake, particularly right now for many people are on watch and wait mode, and the impact is going to be quite large scale eventually if this continues.
The question revolves around the point of when is the war going to end, and when is normalcy going to be restored. Of course, as you mentioned, uh, some of the gas fields, for instance, Israel has attacked the South Pars gas field of Iran. The US has attacked the Kharg Islands, which is the main point from which oil cargoes are dispatched by Iran. Now, even if we assume that the war is going to end, let's say in 10 days' time, when is it, are these, facilities going to be restored and come back to normalcy? If it is going to take between 3 to 5 years for 17% of Qatar's oil or gas supplies to resume, then the devastation and the loss and damage to other facilities in the Gulf may also be of a similar nature. So that is a big question to which we don't have answers at the moment. Second point is that, Russia, for instance, has diverted a ship which was headed for China to India. Russian oil is also now selling for $93 to the barrel. And the prices today shot up to about $119 to the barrel. It came down subsequently to about 108. Now, if oil, which is still, uh, you know, uh, accounting for a very large chunk of the economic activities of a country, it remains at a very high level. It is going to affect the economy. And just to mention the fact that about 1 crore, between 90 lakhs and 1 crore people from India are working in the Middle Eastern countries.
Absolutely.
Now they are sending about $130 billion of foreign inward remittances, which leads us to overcome our current account deficit. Now, if this war continues for long, many of those jobs may be on the line, may get disrupted, and the inward remittances will also suffer. The last point is that
Right.
we also export substantial quantities of goods to the Gulf country. Now, all those things will, suffer
Okay.
adversely. So the whole situation, and for instance, textiles, let's say we are exporting garments to the Middle Eastern countries. Now, those people who are working in, let's say, Tirupur, Coimbatore, other areas, Bangalore, Madras, now their jobs may be on the line. We have already had this pressure from the US market because we could not compete with the lower tariffs of Vietnam and Bangladesh and the others. For a long time, we were at 50%.
Okay.
Now, this would be a double whammy. So it could have many, many consequences
Right.
if it continues for very long.
Okay, I think we'll just end it at this. Thank you very much, both of you, Ambassador Jayant Dasgupta, Shashank Ravale, for joining us. Some important points here. A very simple attempt here, viewers, to just equip you with what to do and how to invest, what strategy to really look at when we are looking at the war zone investments. Thank you very much for joining us.